The United States commands the world's largest economy and its most dominant military, powered by a corporate sector that reaches every corner of the globe. Yet beneath this immense strength lies a national debt exceeding $40 trillion. That is a trillion with a T, a number so vast it challenges the imagination. When we break that 40 trillion down into individual shares, the math becomes personal. It places a six-figure debt burden on every single American citizen. This creates a baffling paradox. Since the United States government has the legal authority to create its own currency, why not simply print enough cash to settle the account tomorrow? The answer to that question reveals the actual mechanics of money and the fragile reality of the global economy. This chart of national revenue starts with tax collection. Every year, the government gathers trillions from citizens and businesses to fund its operations. Those funds support massive societal obligations. This includes everything from military defense and infrastructure to Social Security payments and Medicare. A deficit occurs whenever annual spending exceeds tax revenue. To cover the gap, the government must borrow the exact difference, repeating the cycle year after year. Every dollar of that borrowed capital carries an additional cost, interest. This service fee must be paid continuously, month after month, regardless of whether the original balance is being reduced. The interest alone now costs hundreds of billions of dollars annually. It functions like a credit card, where the monthly payment only covers the finance charges, leaving the underlying debt untouched. Borrowing is a standard tool of statecraft. The danger only emerges when the speed of debt accumulation begins to outpace the nation's ability to generate new income. If the government has the physical equipment to print $40 trillion, the refusal to do so seems like a choice. That choice is driven by the reality of inflation. Printing massive amounts of currency does not create new value. It simply dilutes the value of every dollar currently in your pocket. In a hyper-inflated economy, the price of bread, fuel, and rent would skyrocket instantly. Your life savings would remain the same on paper, but their actual purchasing power would vanish. To avoid this, the U.S. Treasury funds the deficit by selling bonds. Because the dollar is the global reserve currency, investors around the world treat these bonds as the safest investment on the market. This entire financial system is anchored in absolute trust. As long as the world believes the United States will honor its obligations, the borrowing continues. National debt rarely triggers a sudden cinematic collapse. Instead, the threat usually manifests as a gradual, creeping erosion of economic stability. If global trust begins to waver, investors will demand higher interest rates to compensate for the risk. This creates a debt spiral, where higher interest costs force the government to borrow even more just to stay afloat. This spiral exerts a heavy toll on daily life. Rising debt service costs lead to higher taxes, reduced public services, and stunted economic growth as the debt physically crowds out other investments. This multi-decade drain on resources acts as a hidden tax on future generations. It forces children born today to pay for the spending decisions of the past, long before they earn their first paycheck. History shows that insurmountable debt has been managed before. In the wake of World War II, the United States faced a debt-to-GDP ratio that rivaled the levels we see today. The solution wasn't a sudden repayment of the principal. Instead, the U.S. grew its way out. A massive expansion in technology, industry, and productivity made the debt smaller relative to the size of the total economy. Today's policymakers are betting on a repeat of that performance. They are hoping that modern innovation will once again grow the economy faster than the government can borrow. Ultimately, money is a social contract based on trust. The $40 trillion we owe today is a generational choice, one that will decide if the next century is defined by opportunity